welcome back for another video on AMC technical analysis. I am doing things differently today. First thing you might notice, I have a new mic. Second thing you might notice, I'm holding that mic. It's a little different. I feel like I'm talking on a stage, giving a presentation instead of streaming, but maybe that's good. Maybe this will be more engaging for you as a viewer. Ideally, I want to make high quality content that stands out against others. Mostly I see videos on YouTube where people are sitting down and looking at a screen, and I feel like as the user or as the viewer, I appreciate it when the presenter is talking to the camera. When Trey looks at the camera and speaks to the audience, I connect there in that moment with Trey, and so I'm going to try to give that more to my viewers. This is just my vlog. I'm not a professional, I'm a trader. This is about creating a library of my thoughts and my analysis to look back on for future use, and today was one of those days where I looked back and I took a bunch of information that I had posted on different days as far back as November 24th, I believe, to try to figure out what just happened. Like, I had to stop, sit down, and just try to understand how I could have missed this, and it's really frustrating because I didn't have to miss this. And I'm going to go over really quickly before I get into the analysis. I'm just going to show these things I had said previously that could have given us a clue. So this post on Reddit I entitled "Blinded by Bias." I saw the dip coming, and because I did see the dip coming, but I just didn't believe it was coming, and that was the problem, right? So November 23rd, right? I mentioned that the bears hit the price too hard. Now the implied volatility has increased on a decrease in price, and I thought that was bad for the bears, but it turns out they captured the implied volatility, and I continue to observe that. All right, on November 26th, there was this incredible divergence between implied volatility and the price, incredible divergence, and it occurred on a spike in volume as well. All right, and in talking about this, I say unless the relationship has become negatively correlated, that is the relationship between implied volatility and price has, negatively correlated, that would signal a massive sell-off. Scary times. There I said it, November 26th. I said, hey, if this thing has flipped on us, like, we're fucked. And I continue to make this observation, right? On November 28th, I'm explaining in one of my videos the correlation between implied volatility and price, and I linger about why things aren't looking right, and I just kind of move on. Oh my goodness. And I also kind of imply here that somebody is pushing the price down, cheating the price down, and then making money on puts on the way down. And I mean, if I were an illegal short seller and I knew Moaz was coming, that's exactly what I would do. So I'm implying that somebody else is doing that. See, I always assume that people are rational. They want money. All right, and if you can do something to make money, you will. And that's the premise that I make those kinds of conjectures over. Now, I'm not specific, and I don't like to dwell there because that's all speculative, and there's way too much of that in my opinion, so I try to stay grounded and look at things that we have. So moving on November 29th, I see this divergence again, and this time I say, if the correlation between implied volatility and price has flipped, then a drop like none seen before is coming. I wrote that. I said, if, then this, and that happened. So why wasn't I better prepared for it, right? In that moment of time, I should have said, yeah, there's like a 5% chance that's happening, and then had a plan for it. And I did have a plan. That was that emergency cash, that little cash position I like to keep just in case things don't go my way. And with that cash position, I was able to make more money on the right down, which has now enabled me to put more of my investment strategy into focusing on the bounce, right? When we do bounce, I'm going to have a more bullish exposure to the marketplace than before because I played the way down. I know some people are really off put, no pun intended, by some people trading puts, and that's not okay, all right? Diversity, tolerance breeds strength. Echo chambers are bad, okay? And if I can make money on the way down, that's going to let me set up a more bullish position, a stronger position to ride on the way up. And as I make more money on the way up, that's going to enable me to make an even more bullish position. All right? I'm a trader. I've been trading for years and years and years and years and years. Not years and years and years and years. Well, I guess I started when I was 18, and that was 20. No, that wasn't 20 years ago. It was like 15 years ago. I don't know. I don't like to think about my age. Moving on, though. This post goes into detail how I could have seen that dip coming and just failed to. And I do appreciate that people are watching these videos. I really do. I really appreciate you being here and joining me in this process and on this journey. I hope that in the future I can somehow engage you to participate with me in a way that is more, I want to say academic. I know that I can come off a little rough online, but I think some disagreement or some debate, not disagreement, but debate could be really good. There always needs to be an argument between the bullish thesis and the bearish thesis, and whoever is winning that argument should inform trading, I think. It's not, you're never going to break away from that yin and yang, that right and wrong, you know, relationship. And find the truth. You have to know everything, both sides of a scenario, to really understand what's happening. You need the full picture, right? And I feel like in the community, it's really easy to be bullish, and even if you have bearish things to say, those bearish things can be put out there and just be completely ignored, even by the person who said it, right? So I really hope going forward into the future that I can help kind of foster this think tank and maybe help someone else along the way, and myself. Okay, so that was this Reddit post, and that's all I wanted to cover there. I'm gonna go ahead and pull this to the side, and we're gonna focus on the charts now. Okay, looking at the daily. Today we saw a green day, which was nice, up 5.99%, but that is nowhere near the drop that we saw yesterday and the day prior. The $29 level, which was my symmetrical target, my symmetrical triangle target from October 22nd, is still a pretty informative level. You can see that yesterday the closing price was moving towards there, and today we opened near that level as well. Moving forward, this is looking like a bounce, but it doesn't necessarily qualify as a bottom yet. You are going to notice on the 1 minute chart here, these bottoms, and oh look, a double bottom. That's true, that is double bottom, but that double bottom doesn't confirm until the intraday high, or that middle peak in the pattern is passed, and the price needs to close above there before we see a double bottom. Right now, because that double bottom failed to shape out, what we're looking at more or less is an ascending triangle, right? And that doesn't necessarily have to break out to the upside. That might be a continuation. That might just be signaling that another downside move of $8 is on the table, and that could happen. Really, anything could happen at this point. That's what this week is setting up for. That's why implied volatility is rising. And I just want to say really quick, it's really fishy to see that put volume come in, and then 2 or 3 days later, this Omicron news hit, and now all of a sudden the news is like reversing on the severity of that. So just wanted to mention that. I did see that, and I do cover that, but I'm not much of a, I don't like to speculate or hype too much, but I just wanted to mention that. So today, bounce? Maybe. Or it could just be a pit stop on the road to hell. Let's look at the 15-minute chart, and I'll explain why I say that. I'm gonna change my drawings here. Okay, so what are you looking at? What is this, Cap? What is this? You see these yellow lines moving up at these angles, right? That's kind of what we see right now, is just another one of those lines. And so far, we haven't seen any level survive. Every level is just getting plowed through, all right? Even the diamond bottom up here served as a continuation pattern, all right? Thunk, 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 thunk. When's it gonna end? It's really hard to know until we see a good sign of strength from the bulls, which at this point would need to be a breakout and up. We can only assume that this move is still heading down. And there are some reasons why it may be bouncing, but it's very speculative, and that has to do with the broken bullish bat. Now, a couple days ago, I made a video, and I showed this bullish Gartley, or this bullish bat. I mean, Gartley discovered the pattern in 1935, and now it's called a bat, not a Gartley. I don't know why. But this same pattern appeared in 2020, and the pattern technically busted because the run dove down. When the price dipped and reached 191, that low technically broke that pattern, but what we saw was a slingshot effect. The price jumped up, all right? That was when that big jump up happened. And what we're seeing now is something very similar, where we have a bullish bat, but it's broken, and the price continues to fall. And I'm thinking that the length of that dip might be the actual slingshot effect. And, you know, that might be the actual pulling back, the momentum that they're gaining, because really shorts create buying demand in the future because they have to purchase the shares in order to close their positions, right? So they sell short now. Well, now they're creating one share that they're going to buy in the future. So if this downward pressure is caused by shorting, that would imply slingshot. I mean, that's what shorts do, is they make slingshots. So if you have these highly shorted stocks, they could rip, you know, if you catch the shorts with their pants down, so to speak. That's why you get these rips, because when they close, they are buying. So that was the 1 day, and the 15-minute, and the 1 minute, and that's all that really matters right now, is we're just looking at the height and length of this dip. You can see that the VWAP came crashing down, and we were a good solid distance below the monthly VWAP, and then yesterday the VWAP and the price just came crashing together. And you'll see this on my daily charts that I'm actually missing the VWAP for a couple of days, which is super frustrating. Also, shout out to Luca Designs right there. And today I finally have the VWAP back. All right, I have VWAP back. You can kind of see it. And it just stops right here, though. You can see where it just stops. And the last time this happened was in late 2020, prior to that big rip. So we have the same pattern. We have the same pattern being broken, and we have VWAP behaving in a similar way. And also implied volatility is also behaving in a similar way. I'm not a cycle theory guy. I'm not a fractal guy. I think, though, that if the parties who were doing what they were doing in January are doing what they were doing then now, that a similar pattern and a similar behavior result would occur. And so for that reason, I still believe a bounce all the way back up to where we were is possible. But it needs to start occurring. It's going to start with a sign of strength from the bulls. The RSI moving out of the oversold region sharply is a good start. And yesterday, that is almost exactly what I drew. I said, I want to see a rejection of this level. And that is what I see. So I'm happy with that. Implied volatility did drop. And that is not bad. Right now, that is not bad. Because of that relationship, the implied volatility and the price has inversed. Now we want to see implied volatility drop for a while the price climbs up. Eventually, when the price has moved back up, probably above that VWAP, that's when the implied volatility will flip again into the bull's favor. So I'm watching the VWAP and implied volatility very, very closely. If you watched my video yesterday, you know that I made some money on puts, and I took that cash today and I was able to make a bounce play, which is good, which is really good. I like that. So I'm still in the game, I'm still here, still trading, and honestly, if me playing puts bothers you, I don't think that you're going to enjoy my channel very much because I play both sides of the trades. I really do. I have been trading for a very long time, and to play only one side has never been beneficial for me. But when I play both sides, I almost always have a more optimal result. So my diamonds are with ComputerShare. I hodl those shares, but my broker, I trade with my broker because honestly, the brokers are making out like dogs selling our payment for order flow, or our orders as payment for order flow, to the market makers and such and such. So, I mean, everything I do with my broker, I consider to be kind of outside of the diamond-handed ape play. All right, I am making that play, just not here, and that's not what I'm journaling. Because, you know, the most diamond-handed thing you could do is just unplug, is buy and unplug, and just, you know, set a price alert for $10,000, $1 million, $10 million, $69 million. But obviously, that's not what most people are doing. That's not what I'm doing, right? I've always been trading, and now I'm just trading these. Nonetheless, I do hope for MOAS, and I do want to see an end to the market corruption, which is blatant and widespread. It's systematic. You can pull up failure to delivers on all the stocks on the SEC's website, and it's tremendous the amount of shares over the entire equities markets that never get delivered. And if you read up on what Dr. Suzanne Trimbath has written in Naked, Short, and Greedy about failure to delivers, you'll understand that the resolution of all this corruption comes down to those failure to deliver positions being closed, and how X clearing is a huge issue, because if you have colluding market makers resetting the clock, which is a specific move in which one market maker buys deep in the money calls and exercises them, and then the other sells naked shorts to satisfy those shares to help the first market maker appear to have covered their shares. That can all happen X clearing, and if they fail to deliver, then the clearinghouse will never know it, and it can stay quiet and private between those two market makers. And the exemptions from the 1940s Investment Act that make that possible are also made available to these companies. You can look it up. You can go to the SEC's website, look up Citadel Enterprise Americas LLC, pull up Form 40-6B, and you can specifically see which sections of the 1940s Investment Companies Act that company is exempt from, and it includes the laws that were written around insider trading. So that's what I'm getting at, is these FTDs have to be resolved, and that's really where I think the MOAS trigger lies is in a securities fraud investigation. All right, nothing is going to happen until we get suits of a different sort into those buildings, digging up those second books. I think there's a second set of books, and until we see those books, we're just going to see a continuation of this play. And I think that we're going to see these big volatile moves all the time, because that's where the money is to be made, is in the volatility, right? So it is possible that these colluding market makers are creating incredibly volatile stocks, and then luring the public into buying these stocks in a way that doesn't affect their ability to manipulate the price, right? And then they just make money on the public who's making those orders, all right? And as long as there's enough volatility that enough people keep winning, the cycle just continues. It can continue forever. And that's really my take on it. I don't go into it very much, but that's where I stand, and that's why I'm making sure that I'm always winning. Because I know as a retail investor, I'm the little guy. I'm the one who doesn't have all the information. I'm the one who doesn't know to buy deep out of the money puts 2 days before Omicron news hits the market like a freaking sledgehammer. Like honestly, we don't have information like these other privileged investment companies and people on those boards do. And so you can guarantee, if you're playing a game that wasn't your idea, all right, that somebody else has something to get out of it. And in this case, the brokers are making money on payment for order flow, all right? They go, hey, Citadel, here's my orders. And TD Ameritrade actually discloses in their user agreement that they sell your orders to Citadel, and you can even look up how much money they make doing that. It's a lot of money. It's a lot of money. And then, of course, the market makers make the money on making the market, right? Fees and commissions mostly. But the point being is, this incredible swell in retail trading has been incredibly profitable for the very, very people that retail traders are working so hard to, you know, I want to say, we'll just say fight. But that's where I stand on all of those things. And I don't go into that very much, and I'm usually not this animated, but I think it's the standing up. I think the standing up is good. I think it's good. Okay, so I ran through my charts, I ran through my post. This video is already looking like it's 17 minutes long, which is a little on the long side, and I apologize for that. Let me know in the comments what you think. Are we gonna bounce? Are we gonna dip? Do you like the new setup? And, oh, this is Diva. I didn't run through this. These are my Overwatch, some of my Overwatch posters. I have a lot of Overwatch stuff all around here. I'm a big fan. I play Halo, I play Overwatch, I play GTA, and chess. I would really like to get a nice jacket from Luca. I've been talking with Luca. Luca makes these really cool custom jackets. You should go check him out, especially if you're a gamer. You know, I was talking about gaming. I was thinking, you know, if I do gain a following, because my following is growing. I wasn't expecting this, but you know, I'm reaching 500 subscribers, which is a lot to me. It's a lot to me. And who's to say that I won't get more, right? The growth is still occurring. And so if the following does continue to grow, I'm thinking about creating a space where people who are familiar with my channel can both talk about stocks and game. And it would be a little different than the other communities that you've seen, but it would be on Discord, and mostly the focus would be on getting people together in lobbies in games. Not necessarily discussing everything on Discord, but if you're into that, let me know. Let me know. Halo Infinite has been a lot of fun so far. I'm really enjoying that. So I believe my gamer tag is exactly as it appears on my YouTube. You can go ahead and try to add me or look me up. Maybe I'll even post that stuff, but really just let me know. Okay, I'm gonna wrap this up. I'm talking a lot, and I don't even know if I sound good yet because it's a new setup, right? So, all right, see you tomorrow.